Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we dig into the psychology behind the moves today so we can better understand tomorrow. And today, on this wonderful election day of ours, we're going to be taking a look at crude oil futures. Now, crude oil as a whole, really on the approach for today, and this really goes for any market. One of two things is going to happen, and this is what we talked about in the nightly newsletter as well, going in the overlook for today, is that we're going to have one of two things, either a huge moving day or a very slow range-bound day. And there usually isn't much of an in-between given how much fundamental movement we're likely going to have just because of the elections. Now, this is kind of what we ran into today, where we opened up, it looked like we were going to have a really strong trend in our hands right from the beginning of the day that completely fell apart. Now, that trend down starting off the day, nice strong bear candle, came after a gap lower and an otherwise very strong bullish move up. And the one big thing that we have to assume here is that this is going to be seen as a pullback from the buyers. The buyers are going to want to jump in on this, but they don't want to buy here, they don't want to buy here because it's too high up. They want to buy a pullback. And as we talked about in the nightly outlook, this is the area that we wanted to see. We wanted to see them pull down into 44.80 to 44.70 or so to find an area of bouncing. And we actually opened up underneath that area. So in the grand scheme of things, there are going to be buyers on this entire run lower. So we need to use price action as a little bit of our advantage, and that gave us this little swing low that we had before here. See what the reaction is to that area and start buying into it, assuming that the breakout below that is going to fail, with buyers buying into the bottom of this, of a possible wedge, of a swing low trap, of retesting that prior swing high that we had, all of those levels stacking up in the same place, allowing buyers to drive the market back up. Now, it did have a nice run back up towards the highs, tapped our area of resistance that we talked about this morning on the blog, immediately rejected back down into our area of support once again. So another beautiful opportunity to become a buyer and drive the market back up. In this case, it took a little while, right? They were pinging off of the bottom edge of that wedge and just kind of bouncing around for a little bit. Sellers tried taking over the market, completely failed, and that allowed the buyers to swoop back in and take the market back over. Now, the reason there's a sell at the top is because now, even though we are in a bigger buy area, and this is the location that we want to be buyers in, we're starting to see this act as a range. We're pushing down at the lows. They cycled off of the lows and failed. They made a lower low, but couldn't close down, and now we're cycling back up to the highs. That's about as indicative of a range as you're going to be able to get. So there are going to be a huge amount of sellers who are selling into the highs, assuming that it's not going to work at the first attempt. And that allowed a quick little sell for a quick scalp back to the downside before the buyers took right back over on a massive bull engulfing candle, shoving the market straight through the highs. Now, using a little bit of correlation here, this is the exact same thing that happened on gold. Gold had a massive spike higher, and the follow-through on gold was the exact same thing. We saw it immediately start failing. If we look at the gold chart, we can see they had a very aggressive push higher, and they pushed into, yet again, same thing on gold as crude oil, a major area of resistance as outlined in the blog, and immediately failed back down. And given that those two were so closely correlated, that allowed us a type of correlation trade where you can easily say, well, this allows me to take a sell here, selling the close of that candle, assuming that the break higher isn't going to succeed, with a very small risk for a very large reward. And that allows for the final trade of the morning of this election day of ours. Now, again, it is election day. This type of day is generally speaking early in, early out. People don't want to hang around and wait to see and trade through the elections because it's going to be very whippy, lots of back and forth, and just generally a dangerous time to trade. So make sure that if you haven't hit your goal already, you might want to consider starting to wrap up because it might get kind of ugly. Also make sure, just as a side note, as per the civic duties of being a U.S. citizen, make sure to get out there and vote, make your voice heard. Even if you don't get the candidate that you were looking for, you still did your part and made your vote heard. So that's going to do it for today. Hopefully you learned something. Hopefully you found it interesting. And we will see you tomorrow for the day after the elections to see what the markets want to do then.